Okay, let's continue to calculate the corporate valuation. We have calculated the beta in order to get the required rate of return on equity. Then, using this, the WACC calculation process, considering the cost of debt, cost of preferred stock, cost of common stock, we got 11.14%, which is the WACC of the Apple Inc. But again, it depends on how you research. If you put the assumption, and then you will get the totally different WACC. For this case, it's a little bit the conservative, but the WACC a little bit higher. Okay, let's start the corporate valuation. We have the input section and the project assumptions. Most important part, because we'll link this project assumptions and inputs into the operating cash flows, and then cash flows in the operating working capital, and cash flows in capital investment, and then the free cash flows of the firm we'll get. After that, we'll calculate the intrinsic value of the corporation using the WACC discount concept. Okay, and then we'll get the intrinsic value of the common stock per share. So the initial sales, how much was the initial sales? Where did you get this information? Right, there you go. We collected this income statement, and then permanent gross rate after 5 years. I put the 5%. Okay, as long as you explain how do you get this 5%, totally fine, totally fine. So for me, I found the 5%. Here you go. The technology industry will grow at a rate 3.7%. To forecast the upside by 5.4 and a 1.9%. Blah 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 blah. Okay, so you can link this the information if you want to use. Okay, so 5%. The reason why I put the 5% is that the optimal the upside potential is 5.4% in this the industry, but the Apple is the leading company, so I put just the 5%. And then WACC, we calculated 11.14%, and then tax also we got 14.4%. All the information should be linked or input with the hard number, explaining assumptions and links of citation, blah blah. Okay, project assumptions. As you can see that we have all the information based on the percentage. Based on the percent, you can put certain percentage of anything, asset or whatever. Okay, as long as you can explain. So year 0 means that the last year, the cost of the revenue. We don't need to have the gross, the sales gross, the recent the financial statement. We are going to use the gross rate from year 1. So let's put this cost of revenue, certain percentage of sales, using this information. Cost of revenue out of, so 62%. Then SG&A, selling general administration, divided by the revenue. And then R&D also, we got the R&D percent is 7%. Then other revenue, there you go. And then the working capital, how to get the working capital, right? The working capital is sum of the current asset minus sum of current liability, and divided by certain percentage. So I'm going to make a parenthesis here. So we got 14% is working capital as a percentage of the sales. Then the fixed asset, here you go, the property, plant and equipment, $36 billion divided by the revenue, so 13%. Depreciation expense is a little bit complicated here. because the depreciation is now the melted into the SG&A or R&D. So we need to find the depreciation expense from somewhere. Where can we get this information, right? The 10K provide most information. $11 billion, 1106, 006. So the depreciation 11006. Then certain percentage. Here the fixed asset, which is the property, plant, and equipment. And then I'm gonna plus this depreciation expense of that year, because the depreciation expense out of a total can be explained by the before the property, plant, and equipment, before the depreciation expense recognition. So the property, plant, and equipment net amount, we are using that the property, plant, equipment before depreciation in order to generate the revenue, right? So we put in that way. So 24% is the depreciation out of a total fixed asset at the beginning of the year. Now let's just make some story. Okay, project assumptions is exactly a storytelling based on your research. I'm gonna put the sales growth like 10%, 20%, 40%, and 30%, and then 20%. It is based on my research that I saw an article or research where the Apple will enter into the new industry like electronic vehicle and something like that. So in the upcoming the years, like foreseeable future, they will increase the sales based on this research data. So you put this link or research information into your Word file, okay, and that's totally fine. And then cost of revenue, I'm going to put here like 3% or 33%. It's not much changing. 62%. Then cost of revenue is going to be a little bit, maybe changing, a little bit changing. If the cost of revenue of the electronic vehicle is lower than the cost of the revenue of the computer electronics, then we can reduce definitely this, like from year 3, like 22. Let me just put 60% or like that way, this way. Or if we found the cost of revenue of the auto vehicle is higher than the computer peripherals, then we can put the higher cost of revenue. So anyway, let's just put like the same, very similar. Let's put very similar, like in that way. And then SG&A is going to be, I think it's very similar. SG&A, or where do I get it? Sometimes we can find this information into the discussions, management discussion here. Management discussion and analysis, they provide very important information like this. Net sales has been growing like 6% last year. Then some very good the insight. There you go. The research R&D like 60%, 14%, they have been increased, or 7% or 6%, or percentage of the percentage of the total net sales is 7% for the SG&A, 7%. It's not much vary. Okay, in that way you can also put some making some storylines. 7% or let's say it's gonna be, I think it's a little bit increasing like that way, and then last year stabilized. Then R&D expense, I put a little bit aggressive because they need to do the R&D expense for the new the business. Then it's going to be like stabilized. The other revenue, I think the Apple has been increased their investment every year, so they will get the higher net other the revenue. So I put like a little bit higher, gets higher percentage. Okay, and then working capital, also I put very similar percentage. Okay, then the fixed asset, also I think they will increase a little bit, because they launch new business. And then the depreciation, they usually are the same. The depreciation is usually the same because the useful life of the PP&E is almost the same in every cases, in any cases. So I'm gonna put the same percentage like this. Okay, this is the project assumptions part. You can develop this project assumptions based on the fact that you found some find some new the research information. Okay, and then we will use this project assumptions into the operating cash flows and the other cash flows part. Okay, see you in the next video clip. You guys, bye bye.